Okay, awesome. I think we can get started. Anybody else joining now, you can catch up. But welcome everybody. We're really excited. This is the first webinar in a new series we're starting called the Short-Term Rental Pros series. And we're really excited to start the series just because we want to help everyone get the most out of their short-term rental investment. That could be anything from whether you're trying to find your first property to maybe you already have 10 Airbnbs. We're here to answer all of your questions. And I think we all know that 2023 is going to bring a lot of changes to the industry. There's a lot of new things going on. And so one of our favorite phrases here is data over drama. And we just really like to look at the facts to help you make the decisions best for you, not necessarily what's best for the market or what's going on with your competitors. Everybody has a really unique business case, as you all probably know. And so we really want to help you make the best decisions for your business, which leads us into our topic today. Even though there's a lot of future changes coming up in 2023, it's also really important not to forget what has happened in the past. And so Tom here is going to be a familiar face if you attend any more of our webinars. We're going to have these webinars every 2 weeks on Thursdays at the same time. I'll send the landing page in the chat, but there's a whole list of the next upcoming topics. Tom here is a technical content creator at AirDNA, which is a fancy way to say he knows everything about our product and can teach you anything you need to know, how to use the data to run your business, what all those charts mean. He also runs the help center for AirDNA, and so he's basically the go-to person for all of our customers and all of our employees. He answers all the questions, and he's going to show you today why the historical data matters, even though there's a lot of stuff coming up in 2023, and how to actually apply that to your business so you can make smarter decisions and kind of navigate the uncertain waters ahead. So before I hand it over to Tom, I just want to say, please ask questions in the chat. We'll try to respond to them. Throughout the demo, we want to make this really interactive. And if we can't get to your questions, you can send them in after. You can join us in 2 weeks. We'll have a live Q&A session just because it's at kind of an open forum. So please feel free to ask any and all questions. Tom, I'll let you take it away and you can tell us why historical data is so important.
Perfect. Thanks very much, Alison. I'm just going to share my screen. Perfect. So yes, as Alison says, today we're going to be going over historical data and why that's useful and why it's beneficial in understanding it, first of all, and how you can implement it into your short-term rental strategy going forward, and how it impacts your market and why, sort of seeing these trends historically and knowing when they might be coming up in the future again is beneficial. So we're going to start off on the overview page of MarketMinder here. So the overview page, it's really useful just to give you, like, as you might guess, like a general overview of your market. It gives you really useful things like the market grade, the number of active rentals, the rental channel, for example. But what is really useful for hosts especially, I find, is the map view here. So this is where you can get your most property-specific data in MarketMinder. So here you can filter out shared rooms, the private rooms, and then you can narrow it down to a property type. So say we're looking at Galveston, Texas here, for example, and say you've got a 2-bed listing in this market, or you've just bought one and you kind of want to get an idea of what's been achieved historically, to help you understand what might be possible for your listing going forward. So each listing, each dot on the map represents a listing in this market. You can hover over or click on any of them, and it'll bring up the last 12 months performance for those listings. So the metrics that we're tracking here are number of days available. So that is the number of days it's been available to be booked over the last 12 months. So in this case, 332 of the 365 available. The occupancy rate then is a percentage of those available days. So in this case, this property was occupied 93% of those 332 days. Then you've got the average daily rate. So the average daily rate was booked over that 12-month period, and in turn the revenue generated. So why this is useful, you can then, from the top here, you can see the number of bedrooms, number of bathrooms, the number of guests it can accommodate, as well as its rating on the listing channel it's posted. So in this case, it's VRBO. And in turn, you've also got the number of reviews it's received over that time frame as well. You can then click on the listing page and it'll take you to that listing, and that's where you can really identify, whether or not this is similar to your listing. If you bought a property around this area, you really want to identify what your true competitors are out of this sort of specific subset. So it's really handy to, as I say, if you just bought a listing in this area and you want to try and get an idea of what's possible, you can use these to compare and sort of build your business case going forward. So that is the overview page. And as I say, that's all where you get your property specific information, historical information. But we've gone to the occupancy page now. So this is where you get up to 5 years worth of historical data. So this is where you can really identify trends and patterns in the market, how they've changed over time, and what to expect going forward. So just on the top of the page here, you've got the occupancy rate, booking lead time, and length of stay. So these are market-wide, and this is monthly. So with MarketMinder, you're always looking at the previous month's worth of data. So we're in February, so that this will be reflective for January. So the median occupancy rate in Galveston was 35% for last month, and you can see how that's changed from the previous month, which would be December. You've also got the highest and lowest points over the last 12 months in here as well. Below that, you have your filtering options. So this is where you can get really specific again, and narrow this data set down to what's most relevant and reflective of your own listing. So let's look at 2 beds. You've got price tiers here as well. So price tiers, these are just another way to sort of segment the market and make it as relevant to your use case as possible. So what we're doing here is segmenting the market by average daily rate performance over the last 12 months. So a good way of looking at this is, say we were looking at a market of 100 listings, we would segment those 100 into these 5 categories. So the luxury would be the top earners or the top generating ADR properties over that time. The budget will be the lowest, and then economy, mid-scale, and so on. So again, just another way to make the data work for you. And then you've got your filters as well. So this is where you can get more specific, narrow it down by property type, listing type. You've got freshly managed options here as well, the ratings through to the number of guests and bathrooms. So let's just stick with the 2-bed for now. So the occupancy rate here, this is showing you the median occupancy in the market over the last 5 years. And already you can see there's quite a consistent pattern year on year, even during COVID. The summer, July especially, is the most popular time of year in this market. What you can then do is get even more granular with it. So obviously we've established that July is the most popular time. So if you want to go by the weekly view, you can then see in those months of July, what weeks are achieving the best occupancy. So it looks like the last week of July in 2022 is the best performing. Is that the same case for 2021? Yeah, pretty similar. And the same case for 2020. When you do change these timeframes, you'll also change the length of data you can see. So with the monthly, you can go back 5 years, the weekly, you can go back 3 years, and then with the daily option, it'll show you the last 12 months. So we've looked at the weekly view. So then if you want to go back to the July of 2022, you can see which days we're achieving the best occupancy. So again, you can get, by narrowing it down with the filters and then narrowing it down by the granularity of the data that you're viewing, you can really identify when those hot times of year in terms of bookings are. You've also got on this page the active listings. So obviously occupancy is great, but if the market's being swollen with more and more rentals coming onto the market, it's going to affect your occupancy potentially. So we've already established that July was the best performing month. You can see in July of last year, there was 1,200 properties available. Go back to July of 21, just under 1,000. So you can see year on year, it's increasing. And how is that affecting booking demand? So we scroll down again, you've got the booking demand graph here. So I'm just going to move this. So with this, you can compare supply against demand. So again, if you go to July, 1,200 properties available. And then in terms of actual demand, of those 1,200, you can see that nearly all of them received at least one booking in that month. And again, you can go even more granular and go by week to sort of see which were the best performing. So in this case, we are seeing an increase in demand, increase in number listings in the market, but the demand seems to be consistent with that. So, that's obviously beneficial if you've got a property in this area and, you're not missing out based on more properties coming into the market because demand is still staying high. So let's go on to rates. So first thing to take into account, any filters that you would have applied on the occupancy page will still be in place on the rates, and that will be the same for when we move on to the revenue. Again, you've got those 3 tiles at the top. This is just referring to market level data again. This is the market median for the last month. So these filters won't affect these tiles, just so you're aware as well. So on to average daily rates. So this is now the median for the market again. Again, you can see it's following the same pattern. Okay, occupancy was high in July, and it looks like the booking demand ADR is also high. So hosts have identified that, realizing that July is where they can make the most money in the year, and they're upping their rates to ensure that they're not leaving any money on the table in those in-demand times. The same can be said for those low demand times. So you can see January pretty consistently is the least popular time of year. So our hosts setting a rate that's reflective of what's in the market. If you're looking at this and you're a host and you're not achieving bookings in these low periods, are your rates matching what you're seeing in the market average? Are you set too high potentially? Again, I encourage you to use these filters and these price tiers to make it as relevant and reflective as possible of your listing, so you're not leaving any money on the table even in those low periods. We've seen even reducing your rate by $1 a night can make a difference and can ensure that you receive a booking on those lower demand times. Cool. So then you've got the average daily rate by price tier. So this is just showing you all the price tiers available, and it's just showing the spread. So again, if based on previous daily rates that you've been charging, or just based off your own listing, like if you have if your listing's in a hard to beat area, or you have a pool, or amazing amenities, and you can charge a higher daily rates, that you're going to be sitting in those upscale or luxury categories. And again, you can just compare the rates that you're charging against what you see in these market averages. And again, it's always useful to look at it at a weekly and a daily basis to sort of see how consistent you are with those prices. And then finally on to the revenue. So again, those filters will stay in place. At the top here, you've got market revenue by percentiles. So percentiles are just another way for us to segment properties by performance. So in this case, we're looking at revenue performance. The 90th percentile, that represents the top 10% in the market. So in this case, in July of last year, sorry, in 2021, they were generating over $10,000 a month in revenue. And again, you can look at that by week and again by day. So you can sort of use this to sort of see where you might sit. So the 75th percentile represents the 25th percentile, sorry, the top 25%. The 50th percentile represents the median. So the majority of the market would have been seeing those kinds of returns. And then the 25th represents the bottom 25% in terms of revenue performance by month. Something to bear in mind when you are looking at this, though, is availability. So, if you have an amazing listing with, as I say, like a pool or a hot tub or something that's really going to set you apart, but you only have availability for 1 week out of the month, then you're more than likely going to fit into that 25th percentile bracket. So it's all based on, there's a lot of variables that go into this. So it's all about factoring in, availability and, type of listing and that kind of thing, to understand where you sit within this. And then you've got it by bedroom. So here you can see what that looks like in terms of, revenue and occupancy working together. So we've seen that both occupancy is high in July and the ADR is high. So that is obviously going to in turn lead to a high return in revenue. And you can see year on year, that the revenues have grown in this market. And that kind of correlates with what we're seeing in terms of the number of properties coming into the market. Yes, we're seeing more properties come in, but it doesn't seem to be affecting demand. And in turn, people still can up their rates because of that. In a market where you're potentially seeing more properties coming into the market, but less revenue being generated, that'll be an instance of, yes, there's more properties, but there's less demand. So people can charge lower rates. So it all has a knock-on effect on how how much revenue can in turn be generated. And then finally, you've got the total market revenue here. So this one I find is really useful to just get an idea of overall market health. So it's just showing you the total revenue generated in the market as a whole, and it's broken down by the property type. So you can see in this case, apartments and entire homes are the biggest earners. And again, you can see that pattern of year on year, even through COVID, more revenue is being generated in this market. So, this market is still in a period of growth. As I mentioned, we're seeing more properties come into it, but we're not seeing that have an adverse effect on the demand and in turn the revenue. It's always good to use occupancy and rates in conjunction with one another and see how one has an effect, especially when it comes to number of active listings. If seeing a high increase in the number of active listings, what kind of impact is that having on, first of all, demand? Is the demand being is the supply being met by the demand? And in turn, what kind of knock-on effect is that having on the rates? Are people having to charge a lower rate because there's more properties coming into the market, making it harder in turn to generate revenue? So that's everything we have on sort of historical data. I know this is a webinar about historical data, but I am just going to briefly touch on forward-looking data and how you can use that in correlation with that historical view. So in the pacing tab here, you've got the future demand analysis. So this is showing you actual bookings as of today for the next 6 months in this market. Now, as we established, July is the most popular time of year. Okay, we're seeing a few bookings come in, but we're still a few months away from that. So you can see a big spike in demand in March. We're seeing quite high occupancies for almost over a month away. So let's go back and see if that's a consistent pattern or it's an anomaly for this year. So you can see already there's a big spike in March, drops back down for April, and then it starts climbing go into summer. So again, based off what we're seeing here in the forward-looking data, it's tracking with what we've seen historically. So if you were in this market, there's going to be a big demand coming up in March. You can potentially up your rates for that time, and then you'll drop it back down for April to ensure you're getting booking, because it seems to be a less in demand time of year, or month of the year, sorry. And then as you go into the summer, you can see here, this blue line represents the median booked rate. So you can see as we're going forward into time, you can see that hosts have already started to up their rate in anticipation for those more in demand times of year. So just to recap, on the overview page, you've got property specific data where you can identify properties that are similar to your own, see how they performed over time and what you might expect going forward. Occupancy and rates, really useful to use together, because you can kind of use one to get an idea of the impact the other is having, and then in turn, the knock-on effect it has on the revenue. And then finally, using that historical data to back up what you're seeing going forwards. Is it tracking, and can you use it to anticipate what's coming up in your market? So yeah, if you use all of those together, it's going to really set you in good stead for your pricing strategy going forward, understanding your market, and not losing out and not coming up against any unpleasant times of less demand, I suppose. Thanks very much. I think we're going to open up to questions now.
Yep, we've got a few questions in the chat. So I'll start off. First question is, how often do we update this data from Airbnb and Vrbo?
Good question. Kind of a hard one to answer as well. So it varies depending on where you're looking in the tool. So the occupancy, the rates, and the revenue pages, these update weekly, every Tuesday. Whereas other aspects of the tool are monthly. So the property specific data in the map, for example, that is every month. And that goes for what we see in the invest section on the left here, and the seasonality. And then pacing and smart rates are daily. So yeah, it varies depending on the tool, but it's pretty up to date. As I said, these ones are really useful for that historical data, and having that weekly is super helpful.
Awesome. Our next question is, do we have the option to download any of the data graphs?
You do. So you can put them right in the top of each graph. You've got the option to download it into a CSV, and that's just across what you see in the research section. So it's any of the occupancy rates and revenue. You'll be able to download the graphs that you see here.
Awesome. And then another one to tack on to occupancy rates and revenue. Can you view those by luxury category? And yes, I think Tom showed the filters, but he can go back again. We have these charts broken out into different price tiers for properties.
So yeah, so we do average daily rate for example. So average daily rate is an example, and we'll stick with 2-bed properties and just select luxury. So just give it a moment while it loads. So you can see that's dropped down to 235 listings that we're now looking at. And now this average daily rate is the average daily rate for all those luxury properties in this, all those 2-bed luxury properties in this market. So as I said, if you think your listing is of higher standards based on amenities or location or whatever it might be, or based off what you've charged historically and you've achieved those rates, then yeah, you might fit into that luxury category. And then yeah, you can select that at the top, and that'll be reflective of every graph that you see in the research section here.
Awesome. Our next question is, when it comes to the top properties, are the criteria for top properties the ones grossing the highest revenue, or which other factors do we consider?
Good question. So the top properties, you can view this across 3 metrics. So the filters on this page aren't as comprehensive. You can do it by property type, number of bedrooms, and sort of the single family or multi homes. And then what goes into like how we determine this. So there's 3 options. So by total revenue generated, average daily rate, and the number of reviews. But again, you can filter it down. So say you just wanted to look at those 2 beds again, those ones that are most likely to fit into the that luxury category. We do it by average daily rates. So you can see in this case, this one charging over the last 12 months on average $738 a night.
Awesome. Another question, how does this historical data correlate to projections existing under Rentalizer? And do we have a confidence value for those projections?
Good question. So the Rentalizer, it works slightly differently. So it doesn't work off, it does work off historical data, but it works off specific properties. So this is the sample property. So in this case, we're projecting an annual revenue of $79,500 for this property. So how we're getting that figure is looking at comparable properties in the area. So kind of like what we were doing with the map earlier. So we determine these comparable properties by, first of all, how close they are geographically. It's up to 10, like within a 10-mile radius. So the ones that are closer will have a stronger weighting. And then it's also based on how similar they are in terms of the bedroom, bathroom, and guest count. So this is a 2-bed, 1 bathroom, 4 guest property. And you can see, we're looking at very similar properties that we're pulling in. And if you look on the map, you can actually see the blue dot represents the address that you've entered, and then these purple ones represent these comps. So it is working off historical market data, but it's a very select subset of properties that are going into it. So that's how we come up with the Rentalizer projection. It's not based on entire markets, entire market value, I suppose. It's, yeah, as I say, it's more sort of specific to properties that are comparable to the address that you enter.
We have another related question. What is Rentalizer? Tom, can you give us a brief overview of how to use Rentalizer?
Sure, absolutely. So Rentalizer is our sort of property estimation tool, I guess. So you can put in any address. You could even put in latitude and longitude coordinates. Sorry, I was struggling with that word. And we can then give you an estimate of what that property could generate as a short-term rental over the next 12 months. So obviously here we've got a projected revenue of $79,500 and an occupancy rate of 64%. So we're basing the occupancy rates on the idea that this property would be available to be booked every day of the next 12 months. So a good metric to, understand here is the revenue potential. if we look at this one, this property's example, spacious Venice Beach, you can see over the last 12 months, this did generate $27,500. But we have a revenue potential of 40,000. So that is, again, based on this property that 40K is based on the idea the property was available for that full time 365, because you can see in this case, it was available for 248. So if this figure is 365, based on the same occupancy rate, it would have generated $40,000. So that's how we come to these figures. The other really useful thing about the rentalizer is this financial calculator here. So you can put in the purchase cost of the house if you're looking to buy another property, for example, and then you can open up this financial calculator where you can input any operating expenses as well as any projected startup costs. So you can then get a net operating income against the startup cost that you've got here. And in turn a cap rate, so you can kind of get an idea of what kind of return on investment you'll make. That's based on the purchase of the house as well as those overall costs.
Awesome, thank you. Another clarifying question about rentalizer. So is rentalizer properties that I could invest in?
Yes and no. So you can put in any address. So it's not just properties that are for sale. You can put in, your parents' address if you want, and you can get an idea of how much they could make. But if their property is not for sale, then it's obviously not an investment opportunity. So yes, if you're aware of properties that are for sale, you can obviously put that address in, and you can find out how much you could generate. But the property needs to be for sale obviously as well. But as I say, you can put in any address and we can give you an idea of what kind of returns you can see on that.
Awesome, thank you, Tom. We're coming up on the time here, so I'm going to send a link in the chat. This is where you can find all of our future webinars. We'll be hosting them every 2 weeks on Thursday. Like I said, the next one will be a live Q&A session. So I know we didn't get to a lot of the questions today. We'll be sending out a follow-up email with the recording, so you can respond to that email with questions. Or if you'd like to come back in 2 weeks, we'll be answering your questions live in real time. So if you have something you want to see demoed or you want to have Tom explain a little more, come back in 2 weeks on Thursday. And yeah, the webinar landing page link should be in the chat. We'll follow up with the recording, and thank you all for attending.
Thanks very much, guys.